All right. Good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us as we take a look at the technicals and the fundamentals to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions, grab a pen and paper, take lots of notes. Let's make sure we continue to do an amazing job of participating and engaging. If everybody can hear me loud and clear, drop me a one in the chat. Let me know you are all ready to go. I appreciate it. Yep, I see all the ones coming in. I think we are all good. Now, I had a few technical difficulties logging on with my Zoom, so I think we are all set. So let me go ahead and log out of here and close this out, and we can get down to business. Ryan, good evening, sir. How are you?
I'm doing well, bro. Doing well. It's been a good day. How about yourself?
Oh man, doing great. Glad to be here. Had a couple. For some reason, I was logging in the Zoom. It wouldn't give me the meeting. I had to keep logging out, logging back in, and then it popped up. So I don't know what that was about, but we're all good now. So, Yep, we made it. We made it. So, hey, big news of the day was CPI, right? So we'll take a look at the Forex factory first. And we saw that at 8:30, we had CPI month over month, year over year in core come in. And we see that it came in, the forecast for year over year was, month over month was 0.3%, came in at 0.2, 3.1 for the year over year, came in at 3%. And for the core CPI, right, the big one, 0.3%, it came in at 0.2, right? So if we go over to trading economics, we can see that US inflation rate falls more than expected. So the annual inflation rate in the US slowed to 3%. In June, the lowest since March of 2021, compared to the market expectations of 3.1%, and May's 4%. Also, core inflation surprised on the downside, falling to 4.8%. Okay. And that excludes for the core food and energy prices, right? Which can be volatile. So the lowest since October 2021 on a monthly basis, the CPI rose about 0.2%, slightly more than the 0.1% in May, but less than the consensus of 0.3%, right? So see, it's starting to come down, right? We always talk about those lagging effects, and we see that Wall Street ends higher on CPI, right? Because, right, June Consumer Price Index report eased, right, concerns that the Federal Reserve would need to keep raising rates to bring inflation down, okay? So that's how it goes, the ebbs and flows. The market moves in waves, they're back and forth with the Fed and the market. So still expecting 25 basis points to come, but they're looking forward now to, hey, okay, maybe we get one or two more hikes, but as Fed officials were hinting to this week, maybe coming to the end of the cycle, the tightening cycle. So let's continue to keep an eye on that. Any questions from anybody regarding the CPI report today? Right, that was the news that everybody was waiting on.
Yeah, Benny. Yeah.
Yes.
Just why did the Wall Street ended up higher today as a result of the CPI coming out lower than expected?
Yep, because they're banking on the Fed to eventually pause rate and then move into rate cuts, right? So the more and more they raise those rates, the more expensive it is to borrow, right? The more pressure, right? And then when you look at the fact that if you continue to hike and hike rates, the more and more you got companies, they may start to tighten their belt. There's less investment. That's not good for the stock market, right? The stock market needs people investing, into the stock market, the riskier assets, as opposed to throwing everything into securities like bonds, right? Those safe havens, stuff like that. So they're just looking forward to saying, hey, at some point this rate hiking has to come to an end. So that causes the market to rally. And then we know that when the stock market rallies, you typically get a rally in commodities, right? So we saw the Aussie push to the upside, New Zealand push to the upside, so the cycle continues. But that's a great question. That's good news, right? Because when it comes to, like we say, companies, right? Their balance sheet, companies, if you're investing in stock, you want companies to be growing, investing, right? And then you want those borrowing costs to be lower eventually. Right. So they're always forward thinking. And that's why you saw the positive gains on the stock market. Right. Am I clear on that? Is that good? I'm going to make sure that we're clear on that.
Thanks.
You're welcome. You're welcome. Any other questions? Okay. All right. But we do see the Swiss is strong, right? We see the Swiss is strong. There is a safe haven effect to it. You still have rate hikes. Look, the euro still bullish. The pound still bullish in regards to further rate hikes because they have to get. They're not where the U.S. is in regards to inflation, right? So the U.S. is still above this target. But when you look at your other G7s, things like that, and where their inflation rate is, right, there's still some work to do with a lot of, not all, but a lot. So, like for example, right, the UK and Europe, right, in the eurozone, right, the ECB is still hawkish daily. Hey, we're still looking at rate hikes. So, not the same rhetoric that you from those central banks that you're seeing for some of the central bank officials here in the United States. So this is just one of those data points that they look at, right, to try to get a clear picture moving forward as to projecting when those rate hikes may really, start to pause and then possibly eventually, holding and moving into cutting rates, right? Because we know the United States came out the gate super aggressive, right? It wasn't too long ago that we were getting 75 basis points, 50 basis point hikes, right? So we have to remember that short history. Well, I know we all live in a 24-hour news cycle. It wasn't too long ago that those rate hikes were pretty sizable from the Fed, from the Federal Reserve. So that's why you saw the market rally, right? We saw the index, the dollar index, move down. Okay, and it was kind of a telltale, Ryan, when we saw all those bond yields creep up, but the dollar didn't follow. Right, that was kind of that's what gave me a little bit of a pause, because typically you see a little dollar strength follow those bond yields going up, but they didn't this time. So we see the dollar moving to the downside. So that's that pretty much. That was the news of the day. Ryan, anything else that you might have caught or read in the market?
No, that's been it. I still got a little catching up to do on some of the rhetoric that followed, but nothing top of mind right now.
Yep, got it. So I think the next rate hike, I think it's still probably 90+%. The expectations that they're going to go 25 basis point, but it's everything after that is what they're looking for. So all right, cool. So let's move over back to the Forex Factory tomorrow. We've got more data coming out. We've got GDP tomorrow for the UK. That's gonna be big, right? So let's see what those numbers come out and look like tomorrow morning. And then at 8:30 for the US, we've got core PPI coming out. So your producer price index. So we're moving from the consumer price index to your producer price index, right? Then you've got unemployment claims coming out. So continue to keep a close eye, right, on those inflation numbers. So that's that with the fundamentals, right? At least the key ones that we were focused on today. So if we go over and we take a look at the DXY, if my screen will come to life here. So there we go. If we come and look at this DXY, right? That crown is still intact, and we finally broken below, right, that major daily support that we've been keeping an eye on there, right? So we're moving below. So we're still moving in that ABCD wave to the downside. Now we've bounced around this level, and finally we got the catalyst to push it below. So let's continue to see it, see if it happens, see if that dollar continues to move to the downside. Here is a daily fib running, right, to the downside, right? So smaller waves, and you can see that crown, see it moving to the downside. That's what we've been waiting on to see if that level's these levels are gonna hold, or if it was gonna continue to press down, and we got the break. So let's see what happens. Let's see what happens with the dollar decline. Like I say, still expect 25 basis points coming. So we'll see corrections and then maybe further moves down, right? We know that dollar could be funny, especially if it jumps and access a safe haven down the line. So we'll see. We'll see what happens with that. But right now, for today, it's moving to the downside on the dollar, right? So there we are on the 4, and we can see that was a clean move, right? And break. So we'll see if we move up and retest with that on the dollar. All right. Any questions on the DXY?
No.
Nope. All right. So let's take a look at some of these dollar pairs as a result of the day. We'll start with this UJ because we still, all right, keep it in the back of your mind, we still do not have any change in the monetary policy for the yen, right? This is the market at play. This is rhetoric from the Bank of Japan coming in saying, hey, that price is high. We don't want to have to step in and intervene. You get some profit taking. Plus, you do still have recessionary fears out there, right? And that's lending to the strength of some of your safe haven currencies, as well as the market globally fears that, hey, these rate hikes in some areas around the world can send us into a recession still. So that big R word is still looming out there. But when you look at this UJ from a higher time frame perspective, right, we've been moving bullish off this swing, right? This is a monthly chart. Okay, so you can see we've come back down to retest this 137.90. But if we move and we come into this daily look, okay, so this is that higher time frame fib that I brought down, and then I ran some sub fibs here off that low of that reversal, and you can see we've got a stochastic in the buy zone on this fib running to the upside. We've got a stochastic in the buy zone, and the latest correction, dollar weakness, right? The relief, right, from the yen crosses, right, making that run on the yen. We can see we're right here at 37.90. We're at the 61. Okay, we're in between a daily and a weekly support zone. So I am focused on this because, like I say, we still haven't gotten any shift in monetary policy from the Bank of Japan, and we saw their inflation numbers came through. There's really no push for them to make any type of change right now based on those numbers, their inflation data. So this is where we are. So this is one we want to keep an eye on, as I am wondering if we're going to start to make a U-turn. Okay, these yen crosses are correcting pretty deep now. So here we are on the 4. That's that same daily fib. I just brought it down. Okay, I just brought it down. So we can see if we look back, we've got past resistance becoming future support. So I'm interested to see what happens with this dollar yen going forward. Not quite ready to make a move on it yet. But if I start to see it pause, right, sit here at these levels for a while, then I'm gonna think about putting a small position in on that dollar yen long. That's just my idea right now. So that's where we are. Any questions on this dollar yen?
No, sir.
All right.
No.
So let's see. All right, appreciate it. So let's just see where that comes out, if it continues to push lower or whatnot. But I'm gonna be patient with it within this AB boundary. It's already been a nice move, right, to the downside for us on this dollar yen. I'm good on that move now. I'm good on that move now. I want to kind of wait and see. All right. Okay. So the next one I want to take a look at is we're going to come and take a look at this Aussie dollar, since that was what we were talking about this morning, right? We saw an evening star setup. We saw a swing to the upside of ABCD swing. I have it here on my charts. Just sitting here that I had drew up a while ago, sitting here looking at this one sideways on AB boundary, and it couldn't make up the plan levels and waiting for a breakout. Didn't know which way it was going to break out, but was waiting for price to make up his mind and break out. And we see that we got it today. Can everybody hear me loud and clear? Drop me a 1 in the chat. Saying that my connection is unstable. I've been having internet issues all day for the most part. We're good? Okay. Maybe that was just a temporary thing. All right. So that's where we are. So we've got a breakout. We got the rally in commodities, plus you got dollar weakness on the heels of the CPI news. And so it made up its mind. It is moving to the upside right now. So you can see just horizontal. Sometimes it gives us a lot of clarity if we could just go in and out. I can hear you. Thanks, Joy. Appreciate it. Thanks, everybody. So sometimes, hey, we've just got to look at, hey, things are moving sideways, can't make up his mind. Look for breakouts. Right, and you can see we've got a nice bullish breakout. So the question becomes, do we correct, or do we continue this momentum throughout the rest of the week and start to move up to that 68.95 weekly level in regards to this Aussie dollar? Let's just let the market do what it's going to do, right? So there's that weekly. You can see us making that U-turn there. And right now we're pushing bullish on the news. Okay. Took out a high there. Look at that. All right. Came right out of that zone. And we're pushing up. Okay. So let's see how it goes. See if we correct back and continue long on that Aussie dollar. Okay. If we get to pull back in a continuation, if the initial move was missed to the upside. Any questions on that Aussie dollar? All right. This is just making the shift.
No.
Appreciate it. This is just making the shift and trading what you see. Right? Trade what you see at times. Okay. Top down, horizontal support and resistance. Okay. Market's moving sideways for a phase here. I'm still not sold on long-term bullishness from the Aussie. Right? But this is what we have it. This is how we have it right now. All right. So that's the Aussie dollar. Okay. I want to take a look at the euro dollar. And this is playing out on the money. Okay. So here's your weekly view. And we're pushing up into some levels now. All right, but we're definitely bullish. We know that we have a bullish ECP. We know that we have a dollar where we just saw the CPI report. It came in slightly under forecast. And we know that we've got Fed officials saying, hey, we may be reaching the end of our tightening cycle. But we know we don't have that same rhetoric coming from the ECB. Right? They're still fairly bullish when it comes to rate hiking and getting inflation under control. So, which makes sense. When the dollar was the first one, the Fed was the first out of the gate to be aggressive with those hikes. We know that way back when, especially around when the war broke out, Europe was facing inflation issues, but they had a war to deal with. They were a little slow when it started coming to the interest rate hikes, and then they started to play catch up. And this is what we have now, right? So that's the narrative. And you can see here, okay, from this daily, we got a clean ABCD wave going, right? Whatever you want in this fib, you're getting it, okay? You've got ABCD wave, good one to study, okay? A, B, or C, lowest level within the AB boundary, and we're trying to get to that D extension, okay? But look, we've got just good textbook stuff here, right? We've got higher highs and lower highs. Look at that, okay? So if we come here, look, boom. Here. Okay. Now we're here. And we're just moving up. Okay. We're moving up. So if you come down to the 4 hour, you can see where, hey, smaller wave, lower target. Hey, we're no longer highlighted anymore. Right? Can't make this stuff up. Green to green, everybody. There's your 4 hour wave. Okay. Seeing is believing. That's why we do the same thing every night. Okay. Boom. ABCD wave on the 4. Now we've hit an extension. You come down to the 1, smaller wave. Okay. You can see, because it's the smaller wave, we already have a new AB boundary. So it puts you in the same scenario. Okay. And you guys remember, look, this is running off this low. But watch when we back out. All right. So those of you who've been with us, you know, right, where that original break was. And it's been long ever since. Okay. See that? This is why we say, hey, we don't know when it's going to get there, or the path in which it wants to take to get there in regards to moving sideways, being impulsively bullish one day or impulsively bearish one day. We just know that, hey, if the sequence is going to play out and our directional bias is correct, it's going to get there. Okay? Because the original fib on the 1 hour, that was the original trend line. Right? Those of you who can remember that, we've been long ever since. Now, it's totally up to you how you want to play that 400 some odd pips. Okay, whether you want to trade smaller fibs in and out of it, right? There's the ultimate target right there. On that one, we got 112, and then we've got the daily D extension at 115. Right, this one up here. Okay, so this is your 1 hour target, and this is your daily. Okay, it's at 115. All right, so we know now, running off these sub fibs, that we have a new AB boundary, and we have a 4 hour D extension that got hit. So you see how it all comes together, right? Top-down analysis, ABCD waves. Lower time frames are just fractals of the higher time frames. So we got a 4 hour hit. So we know, hey, do we get the immediate correction to the downside? Okay. So do we spin right off this B boundary to a low and then continue? Or we're going to push a little bit higher and go ahead and finish out this 1 hour fib. Okay, maybe a shallow retracement, finish it out, and then correct. Then get long. We'll see. Only time will tell. We've got the bat signal. We've got a new AB boundary on that subject. Okay. So it makes sense. A 4 hour D extension was it. All right. So this is our 4 hour 1.18 D extension. And this is our 1 hour D extension. It's just different price targets. Right. Keep an eye on. Price may react. Any questions on the euro dollar? It's been a good play.
Oh,
Oh, okay. We're all good. So we're going to keep it moving. So just know we've got a new AB boundary there, right, that we can play around with. So that is the euro dollar. Let's take a look at our pound dollar. Man, it's just moving right along, right? When we're on it, we are on it, everybody. Right? Look at that swing, continuing bullish. Same narrative, right? We've got a hawkish Bank of England, right? We've got what's going on with the US dollar. Boom, drew that up a long time ago. We know that. Has resistance becoming future support. We've been bullish ever since. All right, so we know we get up around this 131.66 level. We're looking at a daily D extension. That's what it's chasing right now. Got some daily levels that we need to fight through. And we zoom out. Boom, boom. Here's that larger wave. See how we brought that down? We just brought it down from the weekly. See how we're climbing there like that. So you know, once you get up around this zone, right, you got some levels that you have to pay attention to. Just like so at some point, hey, do we make a correction to retest and continue? We can figure that out on the lower time frames, right? So here's the swing on the 4. So we know, right? We're up around this 127 zone. We know that we can get some profit taking going on there in that area. We can't be surprised off that 130.89, and then we continue. But you can see how we tested it and we corrected. Look at the reaction there. So it tested at 128.48. Look at that test. That's a strong bullish test. Bears took control, but they couldn't hold it. Look at that nice bullish engulfing candle right. Textbook, right? All happening within the Fibonacci sequence. And that's usually where people can get a little bit confused, right? In the game, especially, you know, if you're teaching yourself, it's like, well, learn this one strategy, candlesticks, how to read candlesticks. Then I learned this naked trading, so just support and resistance. Then I learned about the fib. Then I learned about the MACD, right? And it's like, how do I pull all of that together, right, to make it make sense? How do I pull that together and utilize confirmations and things like that to get into a consistent flow and have a consistent approach to the market? Okay, and this is what we do with the fib sequence and combining it with top-down analysis and support and resistance and understanding candlesticks, right? Sign language of the Forex market. Okay, it's trying to tell you what it wants to do. So we're moving bullish right now on the pound dollar. Okay, and you can see here that we moved right through that ABCD wave on the 1. Look at that. A, B, C, D, bang, hit that B extension, right? So even if you're on your 1 hour chart, who said you can't catch a ton of pips on a 1 hour chart? You just have to know where you're going, right? So in that 1 hour, that's 360 pips to that B extension, and we hit it right on the nose. Okay. Now we've got a new AB boundary. Let me pull this off. Got a new AB boundary. This one is over. Pull this box out. Okay. So hey, the game starts all over again. Okay. We know we're chasing some high levels here. So the question becomes, we got a new AB boundary. Do we push to this 118, 127 zone, puts us in line for an 80-20 play? Potentially. Or, hey, I'm going to stick with the trend, Benny and Ryan, and we just need a low price. We need a low price to continue to get long so we can start taking out some of these levels. That's where we are on the pound dollar. Any questions? No?
No, sir.
All right. Telling you, fibs can clear a lot of the confusion, right? Stop if you're getting caught in the weeds on a lot of the smaller price action. It helps you to see and identify the overall move in the market, right? So if I'm with the trend, maybe this is my sweet spot right here based on your trading plan here at these levels. Can I get price to pull back? Can we get it to pull back and continue long? We get this move, boom, and a continuation. We shall see. All right, that's the pound dollar. Nice moves. Good work, everybody. Good work. All right, so I want to move on. Take a look at this NZD USD. And this reminded me, right? Jeremy spotting that pound CAD and all of that mess is what helped me identify this NZD USD crown on the 1. Look at that. All right. Lights out. That's moving long. Okay. That's moving long. Dollar weakness, a bit of a commodity rally today. So this is where we are. All right. Are they a correlated pair? No. 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 Commodities, right? Commodity currencies, but not a correlation, right? Sometimes the price action just plays out like that. So you can see, right? We've got consolidation, right? Ranging, and then we've got where price held at support and it started to move long. All right. No, that's okay. It's okay. It's a good question, Joy. That's a good question. All right. So look, all right, been pushing long. It's a mess, right? But when you're able, hey, sometimes when it's like this and those fibs aren't entirely clear, just use your patterns, use your support and resistance. Okay. So we're moving along. Okay, we'll see how long that we can see how long that can sustain itself. But we're moving up, right? Play it as such. Okay. Look for pullbacks and corrections and see if it gives us sign it wants to continue. Okay. That's come right into that D extension off that crown fib. Any questions on the NZD USD?
Oh,
So this is why we can look at multiple pairs, right? Because they all once you get it, you can see that they all have a flow to them. They all have a flow to them. So let's look at the dollar CAD. Because we know we played the correction, it was an ABCD wave on a correction, then it turned over and started moving back down. And you can see we're breaking through some levels here. Okay. Always a lot of bouncing back and forth on this pair, but we can make do. So we can see it made a lower low. That's a confirmed lower high, right? Look at that. Okay. I won't say a confirmed because we haven't taken out that low yet, but we can see where we created and we held past support becoming future resistance, and we formed a swing high, and we're moving to the downside right now. Okay, that's the stochastic that's still coming out of that buy zone. I mean, out of that sell zone. So this is where we are. So if we zoom out, we can see the move that we have, right? We got the ABCD wave on that correction. Okay, and we'll look at it in more detail on the one. Right, but you can see where we had that ABCD wave, came and tapped in, and then it reversed, right? It collapsed. Had the inner trend line break run. Okay. If you come down to the one, you can see exactly what it was doing. There. Okay. Look at the wave, right? How it came down. Boom. Right? A, B, C. Look at that deep pull back to that 8-6. Okay. So look. It's all okay. Finish right there at 1.18. Now we have a new AB. Okay. So that's 3 we've seen now. Okay. These dollar crosses. So it's the same game. Hey, do we pull back? Right? Do we have, if we're going to see dollar weakness, do we have a crown type situation coming into play here? Right. Do we get an immediate reverse off this B boundary and a pullback, or are we going to turn over off this 236 and push down to retest support, maybe a 118, 127 zone, and then reverse out? We don't know, right? But if it reverses right off that B boundary, then we just wait on a high price. But right now, the dollar weakness moving down. Okay. And we got another 25 basis points out of the CAD. Take a look at oil too, right? We saw commodities rally today. Okay, so let's see what we get out of it. But we've got a fresh AB boundary on the one on the dollar CAD. Any questions on that?
no.
No? All right, let's continue to flow with the markets. Okay. Dollar Swissy. Gone. Dollar weakness, Swissy strength, broke through. Boom. It's clean. All right. We're coming into, right? Coming off that 382. Yeah. We may not get a crazy, ridiculous pullback, right? We got a 382 that it came in at, but we could see a correction if it starts to settle around, a correction and a pullback, maybe to retest this area, right? And then a continuation down on that. But you can see after we got a long time ago, right? And that's typically not my zone off this 382, right? We got a beautiful 80-20. And then ever since off that 382 and that TP1, it just shot straight down. Right? So we didn't get a deep correction. All right, but that's the move. Over and over and over again. A, B, C, D. All right. A, B, C, D. So this is where we are. We need to go ahead and let that one finish out. Okay. Symmetry is beautiful. Beautiful, right? Bears had control. That's the dollar Swiss. Any questions?
Nope.
Nope. All righty. And I was saying we looked at the dollar yen already. Want to take a look at this gold, right? That was a topic this morning. And we can see that we got a bullish move. Okay. Bullish move, bullish reaction off of that. All right. So we know if we close this week out, that's going to be a weekly support if we continue to move higher. So here we are. Joy, it's playing out in your favor.
Yes, sir.
All right. Handle your business. All right. Secure the bag. Keep riding it. That's a nice setup. That's a nice setup. We're looking at that low that was created. We got that push above. Glad to see that that went your way, right? That ABCD wave played out and it just continued to accelerate right past it. We don't even have an official high yet because this is the high. So you're spot on with that ABCD wave. It broke through and continued. Nice.
But look where it's sitting at on the weekly, though.
Mm-hmm. Yeah. It respected that, didn't it? That area. See if it keeps climbing. All right. It's a nice move. Awesome trade. Awesome trade, Joy. Awesome work. Use some seconds on that. Anybody else that took gold trade long with Joy and that idea. All right. Great work. Great work. So that's that on gold. Any questions? All right.
Oh.
So appreciate it, Jeremy. So I had my silver chart on here, but I didn't mark up the chart. And it's pushing pretty good too. So I guess I better get serious about this silver chart because I never am. Every once in a while, market. I'm not a big trader of silver, but that's moving along too. So we just look at that. I'll mark that up at some point. But that's nice. Anybody trade silver?
I used to, but I thought that when gold went up, silver went down, so I didn't even look at it.
Oh, they have a gold to silver ratio. That's not a like an inverse type thing. No, that's just something else. You know, but yeah, that's a nice push. So we'll start marking that one up. Need to put me in hard about that one. Crude, right? It's just running. Yep, platinum, all that good stuff. We've got the ability to trade all of it. We probably should look at it. Right. Donette already recommended that dollar next, and we should be trading that. I know a lot of traders that trade the dollar next, so that's a good one to trade too, from what I hear with the volatility. So look at that. Broke above that 74.69 level, 75.85. Got a high here. Need to plug in on oil. So we can say that that's where we are probably headed next level. Still holding partial profit. Ooh, 68.15. My goodness. Good job.
You're already on the oil, man.
Man.
I knew Old Faithful on the oil.
Mm. See if we can get price to retest maybe. And continue. Don't know if we'll get it though. We'll see. Let's see. It's a high there now. Off the 4. Nice rally today. I like anything that's moving. I will say that. Yeah. All righty. That extension. 76.86. Gonna tag that. Double bottomed at that 67.05. Joey, did you spot that? I didn't. Double, triple, that triple bottom.
Triple bottom, yeah.
All types of bottoms at that 67.05 level. My goodness. You can even count that one because that broke and closed right back above it. And hell, there's all type of madness there. I sleep at the wheel on that one. Well, that one got away. We'll continue to watch it. Any questions on oil? Wow.
Oh,
That 68.15 is a beautiful, beautiful opportunity. Man.
68.15, right around there after that bullish candle. This group is good, I tell you. Great work. Great work. I want to take a look at this Bitcoin because it's been slowly creeping. And so there's this crown. They had this marked up forever. Right? So that crown played, then we reversed it, held at that 1545 level. We still never got to that D extension. But it's moving up now. Now 32,467 weekly level. It's made some good progress. Anybody trade crypto still in here in this group? Anybody trade cryptos? Every once in a while.
Dollar cost average on crypto.com.
Oh. Anybody want to bet we hit this 382 off this daily?
Not here.
No bets, no takers. You gotta make it through that 32,467 though. Nope. All right, we've seen that enough. Man, if I traded it, that was the spot. That's the sweet spot. It's been long ever since there. That matter the asset class. Well, let's good old Bitcoin. Let's see what happened with Apple today. Tailed off a bit. Daily D extension. Got a reaction to the downside on that. Let me it's gonna form a base and continue higher. We shall see. Look like on the 4.
Man, oh man.
Yeah. Be interesting. Take a look at that too. We'll take a look at Amazon. Man, that's a good move. Out of that zone. That's a good move. I tell you what, if it want to work its way down to that low price, take it. Might take a while. Well, that's Apple. What you want to look at Amazon? See what's going on. The daily. I just wonder why these charts load so slow. Stop. Kind of just moving sideways at that 118 level, up against daily at 131.88. Yeah, probably similar. They're kind of just sitting in that zone. I have to do some research on that, Ryan. See what would cause that correction.
Ooh. Yeah.
Prime Day did nothing. Did you get a Yeti cup? Anybody buy a Yeti cup? Let's see. We'll wrap it up. We'll take a look at see what's going on with that. Goodness. Ooh. Off of that break. What's that? Thrills? So, anybody join that? Is that what that's called? The Twitter rival?
The threads.
Threads, yeah, threads.
No, I haven't.
Haven't touched it. You did. So we all on that tech stuff. We probably gonna hit that. We may hit that D extension. Filled that gap though, Ryan. Right. And then I want to check this. Check out the chip, folks. Accelerate. This is just running. That may go to the D. Take out that high. Thank you. Yes. Let's see. Close. So I am going to adjust this trend line. And I just keep right on moving. Any type of correction on that. This has been fire. You got to hear. But, well, got a couple deep pullbacks, but not much. Yes. Yes. Nice for sure. Well, that's that. That's that. Anybody have anything else they want to take a look at? I just wanted to go through those dollar pairs and some of these commodities, let the market settle down a little bit after a big data report. Don't want to jump into nothing too soon. After we've made decent come ups on those yen crosses, some of those pounds and those euro moves. Want to be patient with the market, let it fill its way out, and see what transpires overnight. No. Any questions?
No, sir.
All right. Soon we will all
Hi,
be.
Benny.
Yes. Yes.
Yeah, just a quick one. How many
Mhm.
times do you reset your charts in a month or a weekly?
Man, I could go up to 2-3 times a month. But that's just me though. That's just me. Because I like sometimes I like redrawing, looking at different levels. If I do go through and reset them, a lot of times it's fast because I may not pull out, I may not completely clear like my monthly or my weekly chart because those levels a lot of times it takes a while for those levels to be broken and new ones to be established. But I may leave the like clear my daily and my 4 and my 1, and then just leave my monthly and weekly levels and transfer them down and then do some new work from there. But I do it a little bit more frequent than I probably say most people. But why you ask?
Yeah, because I do some setups on my charts but I do reset them monthly. And most of the time when I do it, I reset from the monthly down to the lower time frames, and it messes up my trade ideas, and it's a bit frustrating because I can't track.
Oh,
Yeah, so just
oh,
asking to.
yeah. Yep. That's what I'll do. I'll leave them. I'll start the race. Like I said, a lot of times I'll leave those levels in because then oftentimes if it's a new level that's popping in on like a weekly, you'll be able to eyeball it. You just add it and pull it down. But for these so I don't need to go through all of them all the time. But because sometimes, especially now, I will redraw more frequently. Like if I see moves that are like in tight consolidations, like that's how I identify those breakouts. Like if I'm looking at a chart and I'm just like, man, like I'm going through these time frames and I just can't really identify what's going on. And then eventually I'll clear those out. And then a lot of times that's how I end up like on the like on stuff like what's this one? Like the CAD Swiss, like this breakout. These type of things come as a result of me just like completely clearing the chart and just resetting. Like, what is this thing trying to do? And then when I remark them up and just take a new fresh look, then I'll see like, oh, it's ranging, it's tight, and I'm just gonna play a breakout. Like, and then I'll just pull my fibs off and just play breakout trades like that. So when I do get, if it's like, man, I cannot figure this out, the fibs aren't making sense through the time frames, then I'll take those and just wipe them clean to try to figure out what the next move is going to be. But when you're with these fibs, man, like they can run for a while. Pretty soon we'll all get to the point where we're comfortable enough to, hey, we have our directional bias, because major directional bias, everybody, doesn't change day to day, week to week. Think about that. Like, think of some of these fibs that we've looked at and how long they've been running. So after a while, we'll all get comfortable to the point where it's just like, I'm just looking for an opportunity to add to my initial position. And that's when you really start hitting some home. Where it's like, hey, my directional bias on the pound and the euro hasn't changed. Any major corrections, any pullbacks, it's not going to scare me out of a trade. It's just going to have me identifying new levels to potentially add positions, which is why we always recommend that you trade small so you can work your way towards doing that. You know, so it may not be fun in the beginning where you just have one small position in and it's run 450 pips and it's like that's $45, which if you have a small account, that's huge when you think about it in pips and percentage. But it becomes even more fun when you get comfortable enough to say, oh, this is just a correction. I'm just gonna add to it. I'm just gonna add to it another build, you know, and just let it run and walk away. Yeah. So great question, Jeremy. Always great questions.
Yeah, thank you.
You're welcome. Any other questions before we close out?
No,
So you
sir.
said bi-weekly. All right, you're welcome, Michelle. Have a good evening. Ryan, anything to add before we close this thing out for the night, sir?
No, sir. Great session, man. Great session. See everybody in the morning.
All right, that's that. Hey, love you guys. Appreciate you for being here this evening. Like Ryan said, we'll see you tomorrow, 6:30 a.m. Eastern Standard Time for the pre-New York session. Good night, everybody.